Alright guys, this is a very highly requested video by quite a few of my subscribers back at my newsletter as well as right here at this YouTube channel. I'm sorry for not being able to get to this because I'm really been very busy, as well as this is just one of the scans or one of the filters that I use to find stocks that are in an uptrending market. I have many other strategies as well as filters that I use from time to time to actually capture different parts of the market when the market's in a different kind of cycle. So there are scans where it works very well when the market's in the uptrend. There are scans which works very well when the market's very choppy. There are scans where for traders who want to take advantage of very short-term price movements compared to position traders, etc. As well as I have to do my analysis on my different sectors, industries, and sometimes different scans work well for different stages of the market cycle. So today I'm just going to show you the scan that I use when the market's in an uptrend, and when the stock dips a little bit, and this is what I call the buying the dip strategy. I know this is a very common term between the investing as well as long-term investing, trading as well. Buying the dip, averaging down is quite a very common topic within investors, but for swing traders as well. This is also one of the strategies that we can use as long as we buy near the area of value. So without further ado, I'm just going to show you my top processes as well as the scans that I use for this kind of movement itself. So as you can see from my screen right here, I'm not really hiding anything. Actually, I have all of the scans already in place right there. You can actually just, you want to stop this video and just copy the scan. You could, but it would do you well to, understand the basis of why do I actually put these numbers in and this kind of particular scans and my reasoning behind it, so that, you can tweak it however you want, as well as, add in some additional stuff which suits your style of trading. Without further ado, let's jump into the video. But before that, smash that thumbs up button and subscribe to the channel for more of this kind of videos, and let's get on with the video. So the first scan I look at, you can look at this entire exchange over here. You can see this Finviz. I use Finviz. You can see over here. Finviz is the website that I use. Although I do use TD Ameritrade as well. Thinkorswim, as well as the different other scanners as well. There's even a fundamental scanner at Zex, but however, I think Finviz is honestly one of the best free tools out there for scanning, and even after swing trading for quite a while, I still think that Finviz is an awesome tool, free tool for traders who want to get started, and wants to scan stocks by themselves. So the first one I'm going to look at is exchange, this is honestly, I don't really put any filters on this because I trade almost any exchanges. But if you prefer a certain one like Nasdaq, up to you. So the first indicator I'm going to put in, is actually performance. Performance, there's performance 2. It doesn't matter which one you put, it's just more filters you can put on. So for performance, I like to put year to date up. And currently, this market cycle where a lot of stocks have actually just pulled back, especially the smaller cap companies, have pulled on back. That is where I seek to be a little bit more conservative, with my performance of year to date. If not in a normal, healthy and very strong bullish momentum cycle, like maybe on March, this year, where everything was rallying up super massively, then I might want to put year to date maybe around up maybe 30%, 50%, yada to filter out the best and the strongest stocks, because this actually helps filter those companies that are in a very strong momentum upwards. But currently, if I'm going to put example year to date 100%, not a lot of companies left. You see, I only have, after putting this, there's only these companies that are left. And some of them are very sus or very small market cap, which I don't really want to touch them unless they have very good setups, and those are penny stocks. So those, do be very careful about those. So again, last time in March, if I put year to date 100%, way many more stocks here, 3 pages worth of stocks. But however, now in this market cycle where a lot of companies have actually pulled back a lot of their gains, so year to date 100% doesn't really make much sense. So I like to loosen my analysis as well as my filter to become year to date up. So it's not in the red, year to date up. If you want to be conservative a little bit more, you want to be a bit more stronger, you can actually put year to date maybe 10%. But I like to put year to date up for this market condition. So second one I like to put is actually 50-day moving average, SMA, the price is trading above the 50-day moving average. So the 50-day moving average is a very significant moving average, and there's a lot of terms out there like the golden cross, yada, where the 50 moving average crosses over the 200 moving average. There's a lot of terms out there, and 50 moving average is one of the very common moving averages that's always being referenced. So again, if the company is trading above the 50 moving average, then that is a good sign. So you can see that 50 moving average is one of the things that I really want to look at. Okay, normally, right, in March, I'll actually add in another one, which is 20-day moving average. Okay, price above 20-day moving average, which is even more bullish. But right, if you see, if I put on this filter on, right, from just now was around four pages plus, it just reduces to just one page, right? And a lot of them are very small cap companies. You can see all these like the 15 million companies, not very preferable. Okay, I only have a very short amount of list of companies to trade from. So it's a little bit too strict right now because all the market is super choppy. So again, now I'm going to relax. I'm going to put I'm going to put 50-day moving average. Okay, and that's how you got to be very flexible with your filters and scans, because what a lot of videos or a lot of people don't really tell you is that, they give you a set amount of filter, right? And they say, hey, this is the stock filter. You just keep using it again and again and again and again. But sometimes different market cycles, that filter doesn't really work anymore, and you gotta be a bit more flexible with some of the little variables, and that's why you need to understand why you actually put those in the first place. Okay, I hope that makes sense to you, because it really makes sense to me when I actually started to be a bit more flexible in my scans and actually uncovered many more better trade setups for me to trade from here and there. So next one I'm going to talk about is actually 50-day high and low, right? I like to put 10% or more below the 50-day high. Okay, what does it mean, right? Okay, if you look at the charts over here, right? Let's scroll down a little bit. Let's look at the charts, right? So example, NVAX, right? Okay, that means from the 50-day high, right? Okay, this is the 50-day high. Right now, it's trading at 10% below its 50-day high. Okay, so that means there's a suitable amount of profit margin to take care of. Okay, so again, it's more of a buy low, sell high strategy, right? So if your profit margin is very little, right, that means you only have potential of maybe 3% before it hits a high. Then again, your risk to reward ratio, more often than not, is quite trash. Okay, it's quite trash. So I would like to at least have a 10% profits to take. So again, example, if I'm putting in around $2,000 per trade, right? 10% will be around $200. Then that is a very comfortable, a very decent amount for me to take advantage of. So that's why I put 10% or more. Okay, if I can even be a bit more greedy, right, I can put 20%. But however, I don't think you should go too far with this, because when it's too far above the high, right, that means sometimes the momentum for that stock probably have dropped quite a little bit. So again, want stocks to be just nice around there, okay, then you want it to just rally very smoothly without a lot of obstacles back to its highs, then you take your profits. Okay, that's why I put 10% or more. Okay, next filter I like to put is 200-day simple moving average, right? Is 200 below the SMA 500. This is just a very simple one to just make sure that it's still in the current uptrend. Okay, 52-week high and low. Okay, currently I put 50% or more above low. So you can see you can put a lot, like 120% above low, blah, 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 blah. Okay, currently I think 50% is a very comfortable one according to this market cycle. So again, you can adjust this however you want. But more importantly, you want it to be still in the uptrending market. So all these filters are actually trying to go towards that. And now, pattern. Pattern-wise, okay, I like to put a horizontal support and resistance. That means, there is a, when we look at the charts over here, right? That means it's trading near an area of value, which is near this support. So you can see these purple lines, right? These are the support resistance area. So right now the prices, right, are trading near that area. Okay, sometimes you can see Finviz, sometimes it's a little bit shaky. They don't really they say that it's trading near a support resistance, but bro, like, come on, look at this WB, right? So it's so far away, right? Like, come on, man. Like, but you can see some of them are quite legit. Okay, some like example MVX is quite near this purple line, which is this support resistance. So again, you gotta scroll through these charts yourself. Okay, use this charts tab here, okay, to actually look through all these stocks itself and actually pick out some. Then you can move over to Yahoo Finance. Okay, Yahoo Finance, which I use a lot. Or okay, some of my commenters, right, my subscribers ask, hey, you should use TradingView. Okay, I do use TradingView as well, but I think that I thought that Yahoo Finance is a little bit more beginner friendly, so I decided to use more of those for my reference videos. But I'll definitely be using a bit more TradingView if you guys wish to do so. So comment down in the sections below if you really want me to use TradingView. All right, so you can just transfer over here, then do your analysis here, then you do your trades. So let's go back to the area over here, okay? And last two indicators I like to do is actually current volume above 750K. Okay, so this is, I think, above 750,000 is a liquid enough company. So again, the big market makers could not manipulate as easily as they would if the volume is very low. Okay, so a very low volume, that means the market makers can actually play around with the numbers quite easily. Okay, so we do not want that. Okay, float as well. Float 1 million, above 1 million, I think is a good amount, so that it's not too volatile where it's lower than 1 million. That means it could be really, really manipulated very, very fast. Okay, volatility is going to be very, very high, and for newer swing traders, it's going to be a bit scary per se. Okay, especially you can see those float that are very, very small in those penny stocks, right? Those are very, very scary because it could just spike up, bam, down, up, down, hit a stop loss out. And it's very hard to do those daily swing trades for stocks that have very, very low float. So I like to put over 1 million just to be safe. Okay, so that's it for the screens, everyone. Okay, this is what I like to do. Okay, an additional one that I like to put is actually a sector. Okay, so again, if I analyze the market, I felt that this week technology per se, for example, has put on back a little bit and has a lot of oversold value, and I think there's a dip to buy. Okay, then I'll actually write in technology, right? Put in technology, and you can see that after putting in technology filter, right, I only have 4 companies left. Okay, NTNX, Riot, RCAT, and XELA. Okay, XELA, okay, is a $2 stock, so I'm gonna just I'm not gonna do that. Okay, if I can even put on another one, right? If you don't like penny stocks, right, I can put prices above maybe over $5. Okay, price above $5. Bam. Okay, you only have 2 companies left, Riot as well as NTNX. So again, you can look at these 2 companies to trade from. So NTNX right now, right? If I look at NTNX, give me a second. Okay, NTNX. Okay, honestly, now there's actually a pretty decent how do I say, setup right here. Consolidating a huge bounce off the support level up here, and right now it's consolidating near this area with the moving averages converging. Okay, have a good further upside to get to $40. Okay, and from here to here is definitely around 10%. So you could take this trade as well. You could even set a stop loss somewhere near the lows over here, right? And you reference the ATR, to make your trade. So that's it for today's video, everyone. Okay, I hope you guys enjoyed today's video. Okay, this is what the entire scan I have for you guys is for companies, right? All is directed towards companies that have in a very, very strong uptrend. Okay, that's up for the year, up for the week. Okay, and trading near an area of value, as well as recently taken maybe a small dip because the 50-day high and low is 10% below that. Okay, and want to find setups that is we can enter smoothly, as well as get a profitable risk to reward ratio and swing to be further upside. Okay, and today's video, I hope you guys enjoyed today's video. Okay, smash the thumbs up button, subscribe to the channel. Okay, and if you like this quote up there, okay, do more of what works and don't do something that doesn't work. Okay, just focus on the things, focus on your winners. Okay, cut your losers, and trade safe. And I'll see you again in the next video, everyone. Stock Stay out.